TJ the Wheel Deal coming at you live with another episode of Wheelers, or it's Wheeler right now. We'll see if Dallas and Bill are able to join us in a little while. Dallas is working, and I think Bill's going to be available. I have the link right here if anybody wants to be a panelist, but we're going to have a good one today. Real relaxed, real relaxed. It's going to be on a topic that I feel like has caused a lot of commotion recently because Robinhood has rolled out something that most brokers have had for a while, and that's realized gains or losses on closed trades. So specifically, we are going to talk about rolling options, how the math works, etc. Why does it show in some cases a realized loss whenever you roll a cash secured put or a covered call? Why does it why does it do those things? Anyway, Bill, I see you there, but I don't see you. There you are.
What's going on?
I'm chilling. We're already live. So I was telling him that I want to talk about the math. We're going to go to school a little bit today because it's very, very simple for me, but I've done probably 40 FaceTimes over the last week or so, week and a half. And it seems like it comes up a lot. Why does it show a realized loss on my covered call when I was able to roll out and up for a credit? So I want to walk y'all through why 1 + 1 is always going to equal 2. This isn't a Chinese auction. This isn't crazy, funny arithmetic. This is very basic math, and there is legitimate reasoning from an accounting perspective why the brokerage has to show that as a realized loss in most cases. It doesn't always have to be. Anyway, before we get into it, how was your day? How was your week? How's everything going?
Good. Can't complain about anything. The Jeep is in the shop, though. I think I identified the problem. I think it's the auxiliary battery. I didn't realize there was a second battery in the Jeep. So, it was, yeah. But I'll get it back tomorrow. But other than that, all good.
So the Jeep figured out a very creative way to take money away from you.
Yeah, it shouldn't be too bad, I don't think. But it threw me through a loop when I obviously know how to jump a car, but it wasn't working. So.
No, I hear you. So anyway, we're going to be very, very basic and very, very simple on this lesson because it's so simple to me, but I feel like I'm struggling to explain it to people on the FaceTime. So I'm kind of glad that you're live with me today so we can get into it. But before we do that, I want to do a little quote of the day for you guys that is very apropos for the discussion that we are about to have. And then I want to do a much better job today because at the end of the day, this is Wheelers. This is live Q&A. So I want to be able to go through the questions. If you guys can help me out, if anybody else becomes a panelist, help me out and let's get through all the questions. Let's try to get through all of the questions because this is supposed to be a platform where you guys can come to us for questions. There is no paywall. There isn't anything of the sort today. And we're going to try to do our best to give you guys an adequate response. And if not, we'll Google the shit together. There's Gemini, there's AI, there's all kinds of ways. There's Grok. There's all kinds of ways to get to the bottom line. Fair enough?
Let's do it.
So this is what I came up with as far as something that I think is appropriate. Mathematics is not about numbers, equations, computations, or algorithms. It is about understanding. So there's a lot of people that know how to solve for X. There's a lot of people that know how to solve for X if you give them an algebraic expression. But why they're solving for X, it's real tough for a lot of people. It's because in school, I think we're taught a lot just like to memorize shit, pass the exam, move on to the next lesson. But what do you really learn? What do you really learn? So to me, it is about understanding. So Bill, I'm going to go through some examples of some cash secured puts. And if I were to roll them, we're going to get into it, like why it would show a realized loss versus a realized gain. But working with numbers, with your trade and everything, do you want to just give a brief description as to why you believe Robinhood shows a realized profit or a realized loss immediately you enter into a roll on a cash secured put or covered call?
So I think I know what you're talking about, but let me try to take a step back. So just am I echoing?
Yes.
Oh man, this happened to us one time. I had to
Yeah.
log out and back in. Let me try it.
Okay. So before Bill comes on, let me tell y'all what it is. So you sell a cash secured put or you sell a covered call. That initiates a transaction. So here's Bill. There we go.
That better?
Yes.
Okay. So I think the first thing that you have to think of is that you are closing out a previous position. So
Right.
when you close out a previous position, you are locking in either a gain or a loss at that point. The credit has really nothing to do with that position per se. It has to do with either the time that you've given to it or the strike price that you changed it to, and what that new option is kind of the premium that you can collect from that option versus closing the old one out. But that has nothing to do with actually locking in a gain or a loss on the original position.
So I feel like I have a more layman's explanation for it. And I just look at it this way. And of course, I don't have my wallet. Shit. Can you guys see this or no? Can y'all see that? Can y'all see the whiteboard or no?
Yeah.
Is it better if I go that way? Is that better right there?
Right there.
So check it out. Can you guys see it or no?
Yes.
Okay, awesome. So whenever you do a cash secured put or a covered call, you're going to sell to open. Yes or no?
Yeah.
Are we good? Yes or no?
Yes.
Awesome. You're going to get a credit. Yes or no?
Yes.
Let's just say, for argument's sake, that credit is $100. Fair enough? So you're going to enter into this contract with sell a cash secured put or a covered call, and they're going to pay you a premium for agreeing to either sell these shares or buy these shares at a certain date for a certain price. We all know that part of the game, right?
Yes.
Give me a thumbs up if that makes sense to you guys. Simple. This is second grade shit so far. And guess what? It stays second grade shit. The only thing that's fucked up is your head. I'm going to fix it real quick. Okay? So this is all part of the original the contract. So whether it's Riot, SoFi, it doesn't matter what your ticker is. You're going to enter into a cash secured put, or you're going to enter into a covered call, and you're going to receive that premium. Whenever you roll that position, because let's just say it's Riot, for argument's sake, let's just say that it's Riot, and it's a $12 call. $12 covered call, and then Riot shoots up to $13.50, and you have a break even of like $12.50 or $13 because you got the dollar in premiums. You freak out because now all of a sudden you think Riot, even though it's been sideways for about a year and a half, 2 years since the last crypto went to Riot or whatever. Now all of a sudden you think shit's going to $50 a share, and you want to capture the upside. You want to get out of this contract and into a new contract. You want to renegotiate the contract, right? So that's why we roll. Those are all the reasons that we roll, essentially. We don't want to lose our shares. These are the best shares in sliced bread. This is the next Amazon. You start thinking all kinds of stupid shit in your mind whenever you have shares that all of a sudden go into money. You've been there, right, Bill? It's kind of funny, but it's true, right?
I've been there. We've all been there.
And we forget about all the fucking pain that life ever caused us the minute that the cover call goes into money. Give me a thumbs up if that sounds like you. That's a lot like my self-talk. Forget all about the fact that I was back holding these shares at like $4, when my cost basis was like 10. But the minute I have a covered call that goes into money, I'm like, shit, I don't want to lose any of that gain because I've already forgotten about all the pain. And what is that pain that we're talking about? Is the fact that you only receive $100 in premium, but you look up at the market value of your contract, and in this case, it's going to be something like $250 to close out, give or take. So in order to get out of the contract and into another one, it's two separate transactions. But Robinhood allows you to roll the position. A lot of brokers allow you to roll the position, and that's what starts all these problems from an accounting perspective. So
yeah, but can I stop you there for 1 second?
Yeah.
I think I don't know. I'm not on these calls with everyone, but a roll is just two transactions in one. It's just a simplified way to do it so that you don't have to know what buttons to click. Essentially, they set it up for you, but it is two transactions simultaneously.
Absolutely. You're buying to close the original transaction while simultaneously selling to open an additional transaction. If you want your books cleaner, you would just do two separate transactions. But we bundled it all up, right? And then you'll look after the roll, you're excited because you got another 150 in credit, you're able to raise your strike price, and then what happens? You look at the market value and you're like, the market value is like 800, but I only got like 100 on the original and 150 on the roll. How does that work? Because you rolled in negative equity from the contract. You traded in a used car that had negative equity, right? So that didn't disappear. You don't just get to sweep it into the rug. So all we're gonna do is this: is we got $100. This is sell to open, and then here you're gonna have buy to close, and then here you're gonna have sell to open again. So it's 100. If you just buy to close, it's 150. So it's 150. So we'll go this in green. So this is 100. And then you buy to close for 150. That is all that Robinhood is looking at. That right there becomes your realized loss of $50.
And that they legally have to do that. That's not even a Robinhood thing. That is you closing out a transaction.
Because that happened. It is a realized loss because the money that you gave back were more than the original monies that you collected from the initial cash cover call. Do you guys understand that? It's pretty simple. Can you hear me, Bill?
Yeah, it's better.
Okay. You got 100 on the initial, you give back 150, so you lost $50 on that transaction. That's why you have a realized loss. But then where it gets a little bit screwed up for you is because now you were sitting on let's say you were sitting on a $12 strike, whatever the example was, and you moved the contract over to say 14. So now you're excited about it because you took in, say, I don't know, $200 over here. So you're looking at your credits when you go to your history on Robinhood, and all you're seeing is you're seeing the 100, and you're seeing the 200, and you're seeing 300, and I went from $12 to $14. Things are fucking great. Give me a thumbs up if that's you when you're looking at the transaction history.
It's It shouldn't say that though on the transaction. It should, like, if it has it, because I use Robinhood occasionally, but
Oh, it does. I'm going to show it to you.
you have to click into it, right? So it should say that you had a what was that, 150 and 200? That should say that you had $50 going in.
No. So here you're going to now have, so you have a market value. You have a market value of 100. And then now on the other contract, it's going to show like a market value of like 450 or some shit. It's whatever you were down on the original contract, plus the premiums that you received from the second contract. That's why the market value gets so inflated. So then
you're talking about on the position itself,
right?
Yeah.
Because that's where the confusion is for people, is because they look at the next position and then they're like, shit, how's my market value 600, 700, 800? Why is it so high when I only collected a couple $100 in premiums? So it creates confusion, right?
It rolls the loss into the new position.
It has to.
Yeah.
Because Robinhood is just telling you it's real simple, guys. We're done with the white. So it's real simple. Bear with me because I don't want to ruin my little markers. I use them every day for my shit for the hedge funds. Guys, it's really simple when you wrap your mind around it. A realized loss is just telling you what has happened so far, but it's not necessarily the end result of the entire position. But Robinhood has no way to know what the result of the entire position is going to be, because it's an ongoing game. But that part of the game is over. Let's just say it was a possession in football, and there was a turnover, or it was a first down, a touchdown, whatever the case may be. You got to put a mark on the scoreboard, right? When you're playing a football game or a baseball game or a basketball game, every point counts. Whenever you have a realized loss, it's just telling you that every point counts. We got a special guest here with a channel of his own. Let's welcome Sergio. Oh my God, I'm going to screw this up. Avedian, how did I do? Más o menos?
You did it perfectly good.
Pleasure to meet you. This gentleman has a pretty awesome channel on YouTube himself. Do you want to chime in and tell us a little bit about who you are, Sergio, and your background, and tell the people here about your channel so that we can get them to subscribe over there?
Oh, sure. Yeah, that channel is no big deal. So first of all, thank you for having me on. You're one of the few people on YouTube and X that I follow with full transparency, because I think that's so sorely lacking these days, right?
For sure. Yeah.
Winners are winners, losers are losers. If everybody says, oh, I'm just making $1 million here, $1 million there, run the other direction. It doesn't work that way. So I'll give you guys a little background. I have a really varied background, but first things first, I'm an immigrant, as most people are in here probably. Came here to go to college. I have a finance degree from a major Southern California college, university, USC to be exact.
Right.
Then I got hired on Wall Street literally a week before I graduated. I got hired first by a small boutique company, a firm called Beige Halsey Stewart Shields. And, obviously you go through your training in the Series 6, Series 7, all those series and all that stuff. Long story short, I had wonderful mentors, and, they taught me everything. And then we were bought out by Prudential Insurance Company of America, and then we became Prudential Securities. And after about 8 years, I became the head trader for derivatives and equities at Prudential. Now, I am 57. I go back to the days of quarters and eighths, way before decimalization, way before HFD, way before algos, where we used to front run pretty much every institution because we would get the orders and see it. But it's happening today, but it's happening a lot faster, basically. That's what it is, right? And I've been in the markets for 35 5 years now, and I've seen it all, right? I've seen 4 crashes, starting with the 87 crash, dot-com bubble, '08 financial crisis, and we had a mini UIL crash in between in '94, and the last, I don't know, the pandemic, obviously, when I really thought the democratization of the markets took hold, because we were all stuck at home, right? And government sending us $7 trillion, and market keeps going up, right? Stocks only go up, right? And so that's background on me. But the other thing I have done, me and my partner, he happened to be a Boeing engineer, actually. His name is Harry. And about 10, 12 years ago, we started another channel called The Rideshare Guy. Actually, it's about Uber and Lyft and DoorDash and the gig economy. And that channel has hit about 300,000 subscribers now. I know all the CEOs of the companies, and all 3 are public, as we know. I do a little bit of work there, live streams and things like that. And I feel like I'm like you, right? I'm always on YouTube somehow. I don't know. But my main income source is trading. I don't know much about you, but I'm assuming yours is the same. And that's it. That's the background. So again, I really do appreciate what you're trying to do. Pay it forward. And you talked about my little channel I started about 5 months ago, because there's a lot of crossover. There's a lot of people stuck in life, right? Let it be rideshare drivers, and not every rideshare driver is an idiot, right? There are educated people in there. They're trying to make a living the hard way, right? And my goal now at this time of my life is pay it forward, really, and put out correct information, transparent information. Transparency is the key, and that's what I'm trying to do on the channel. I do put out quite a bit of content. I do live streams and etc., whatever not. Just like yourself, I post my positions every Monday, Wednesday, Friday. You do it more frequently. I just don't have the time. As far as trading is concerned, I've seen it all, and I do. One thing that I want to mention before you ask me any questions, or the chat ask me questions. By the way, we do use StreamYard on our channel as well, so I'm familiar with the chat. Is this a lot of people who are involved in the markets now have not seen an extended bear market? They've seen a flash crash here and there, like we had the Japanese yen carry trade debacle a few months ago. They haven't seen a bear market, right? And I do understand your strategy, obviously, and to put it simply, it works wonders when the market's going up. There is no ifs and buts about it. But I whatever time I have watched a few of your videos, and one thing you do well, which is pick yourself stocks. Don't be a hummingbird. Don't be a jockey at the races. Pick 10 stocks. All stocks are like girlfriends, man. They all have their own character and personality. They all have different betas, and they all have different earnings potentials and all kinds of things. So, get comfortable doing the same thing over and over and over. I mean, if you have a setup that's successful for you, why abandon it? Just stick with it. There is no reason whatsoever to go like a hummingbird from flower to flower to flower. That's why these day traders, I love these guys to death. They make me so much money with those zero DTs that they're swinging, that I'm constantly selling it to them. Is you're going to lose. Look, there's a given to this. The 90% of people who trade lose money. That's a fact. And if you want to be on the other side, in that 10% group, you need to do a lot of things correctly. You need to risk manage correctly. And I'll finish with this. One of my mentors from the first day, he said, "Serge, do you know what the 3 Ps are, bro?" I go, "I have no idea what the 3 Ps are, sir." Because I'm like a headless chicken running all over the place. And he said, "Look, 3 Ps are this, son." And this, by the way, is valid 30 years ago, and it is valid today. First P, patience. Patience. You got to have patience. Wait for your setup. Okay, think of this like I'm a lion in the bushes. Okay. Do I want to chase every rabbit and squirrel? And he may be quicker than me. I'm just going to expend all my energy and trying to eat for like 10 minutes. Versus, do I just lay in the bushes and wait for my right setup, right occasion, When a zebra goes by or a gazelle goes by, then I'm going to put everything I got into it and eat for a month. You know what I mean? So people are addicted to trading, right? They just get the adrenaline rush and, they have to be involved somehow. No, you don't have to be involved. Just wait for your spots. And, less trading is better trading. So that's the first piece. Second piece, position. A lot of people blow accounts because they're positioned incorrectly, position size specifically. Not the position of the stock, like long, short, and whatever. And they position incorrectly. They have a $5,000 account. They go YOLO into some sort of zero DTE. I'm like, bro, you're going to lose. You are going to lose. You know what I mean? So that's the other channel. That's the rideshare guy. And the third P is planning. Have a plan. You know what I mean? You got to have a plan. If you don't have a plan, like you have a plan, your plan or your deal is, you're a wheeler, right? Okay, cool. There's a million different plans, but at least get comfortable. If you're going to trade options, get comfortable with Greeks. Understand what they do, how they do it, right? So those are the 3 Ps. If you guys stick to 3 Ps, whoever is in the chat, trust me, you're going to be way ahead of the camp and way ahead of the game.
Good, wise words, man. Wise words. I want to talk about one comment that I caught from you.
Okay.
And is you said that what I do works in a bull market. So I've had this conversation with 1,050 people. You're going to be 1,051. Mm-hmm. I'm going to tell it to you like this. The selling put, selling cost, collecting premium, rolling when it makes dollars and cents will always outperform someone that is strictly buying and holding, because what the hell are you going to do whenever stocks go bad and you own the shares and you're not collecting any premium?
Without a question. No, I wasn't questioning what you're doing. What I was saying is that a lot of the people who are involved in the markets today have not seen a bear market or anything, or extended, prolonged bear market, and they don't have a strategy. Because look, another mentor comment of mine from years ago is stocks walk up the stairs and take the express elevator down.
Facts. They go 9.8 meters per second squared.
Yeah, exactly. So, people are used to this grinding higher and then what, right? I was like going like, okay, so that's the planning part. Have a strategy. If there's a prolonged bear market, look, people, there will be one. Trust me. I don't know when. And I don't care when, but I know what to do when it shows up.
Like I played poker, guys, and it's a lot. Like you build your bankroll, you're in this tournament.
Yeah.
And you're working, you're winning a lot of hands, you're trying to stack chips, and then it's inevitable that you're going to get in a horse race situation and all your chips are going to go in the middle and either works or it doesn't. And you're like, shit, I played this tournament one time for 3 days. And on the third day I got cracked. And I'm like, shit, dude, I lost my whole stack in about a minute and a half hand. You know what I mean? Yeah. And that's what it feels like whenever the market like tanks. Yeah. And it sucks, dude. Like I've been in probably like $1.5 million in cash secured puts. And then you wake up and you're like down like 30-40% on every position and you're like scrambling. So I luckily have like my little journal, like, hey, I have my if shit hits the fan strategy.
Absolutely.
And guys, I don't talk about this a lot on the channel because we've been in such a bull run for quite some time.
Yeah.
But I probably revisit and retweak my if shit hits the fan strategy at least 2 or 3 times a week. Like, what are the 3 to 5 moves that I'm going to do to like tighten up the screws in the fort, so to speak, right? The fort, the storm is coming. Like, what am I going to do? Because whenever things go down, that's where you realize where your conviction really is with some of these stocks, right? Absolutely. Like a lot of the people love these high flyers.
Yeah.
Whenever things are going well. But when things are not going well, you sure wish you had a little bit more Amazon in the portfolio or a little bit more boring shit like Walmart, you know?
Boring is good. Trust me. We saw what happened with these quantum, right, computing stocks last month or so. Things gone from 2 to 40, right? And then what? Most of them were down 70-80% in 3 days, right? Okay, so if you're swinging options, And if first of all, never ever sell cash secure puts on things like that with 400 IV or whatever. You're just going to get crushed. There's a reason for it. I mean, don't even get involved in those parabolic stocks. When those parabolics end badly, we know they do. But
yeah, I got so many messages about quantum computing over the last few weeks.
Yeah.
Dude, I can honestly tell you, I'm 49 years old. And it probably was 2 or 3 months ago that I even heard that term for the very first time.
Yeah,
and now all of a sudden there's like a handful of stocks that are going like crazy. And now I guess a lot of them have like come back down to reality or close to it. And I just haven't even, I don't know about Bill, but I haven't even looked at one of them. Like one of them was brought to my attention, like IONQ or something. I don't know. There was one.
I have a whole list, and I caught some of them up. I caught some of them down. I caught it the last couple of days. But here's the thing. The thing for me, the important thing for me is, when there is like what you said, right? I literally until today. First of all, I have a trading coach still. It's the same guy for the last 25 years. He's a shrink. And I can afford to pay him, and he's a trader as well, and he knows how I trade, right? And every month or two, we will have a session, and he'll look through all my trades. Like last year, I did 1,080 trades or some shit like that. It's on my channel. I put my year-end results, so if you guys are interested, go check it out. So last year, I finished with 120%. Okay.
Did I feature the right channel, or was there a different channel?
No, the channel is Sergio. That's the Right Chair Guy channel, and just my finance channel is Sergio Avedian, just like my name. So.
Oh, okay. Hold on. Let me see if I can feature that for people.
Yeah, it's okay. Don't worry about it. There's no money in YouTube. We know that. Trust me. From the other channel with 300,000 subscribers, I know there is no money in YouTube. Trust me.
How do you spell your last name?
Avedian. AV. Yeah, there it is. So, that's the last video I put up today. I called it Michael Saylor's Bitcoin Gambit. I love that movie.
My 2024 results, full transparency. I'll even post
Queen's Gambit
on the community
I
page
love that
today
movie.
with my existing position.
I think Michael Saylor is the shit. Excuse me for. By the way, I'm a New Yorker, so if I do cuss a little bit, I apologize ahead of time. I don't know your crowd, so your crowd may be PC or something. I don't know.
No, I've been cutting down because I'm turning 50, so I said no more F-bombs. So I've got only a few days to get them out of the way. I don't know if y'all have noticed, but I've cut down like 80% already. So this is like happening for me. It's happening for me.
I'm on a cutting diet myself. Yeah, for sure.
It won't last long. He's quit like 10 times already. It's fine.
No,
bro, dude, this is like soda, bro. Like it's happening. Look at me sporting the freaking core, the Evian or Naive spelled backwards, Fiji. I'm doing all the bullshit.
So anyway, but what you said about, you revisit your shit hit the fan playbook, right?
Got to, man.
So I've been doing this for years, and I'm still doing it because I'm super active trading. But so one thing is, if you can get yourself a mentor, and TJ happens to be a mentor to all of you, it looks like, but more importantly, somebody that knows your book, how you trade, what your tendencies are, right? Because when you're way ahead in a year, like last year, in 3 months, I was up 200%, right? And then I had a huge drawdown. Right. And then, of course, I call him up and I go, hey, we need to have a session. And I'm like, OK. So he looks at the trades. He goes, you dumb shit. He goes, you're still doing what you just did. When you get super aggressive and you're up a lot, that's what it is. These trades don't belong in your book. Get them out. I built it back up. But the point is, what I'm trying to make is, if you can have a mentor or somebody that knows your book or the way you trade, your tendencies, please, take that. And one other thing is, do a monthly diary. I have a diary. I go like TJ said, he revisits his playbook. I literally write in my diary every day. What did I do? What did I do right? What did I do wrong? So keep a diary and revisit that diary. And out of that will come your best plays, best setups, best trades. Because I don't know how many of you are technical traders, fundamental traders, macro traders, quant traders, whoever you are, whatever you do. But those are important things. They're simple things, but they will help you in the long run, And that's the best advice I can give you guys, man. I mean, to me, this is a hard game as it is. Don't make it any harder on yourself than it should be, right?
Agreed.
Yeah.
So how long did you work on Wall Street, Sergio?
28 years, 27 years.
Jeez.
Yeah, I know what there's whatever there is to know about options. I mean, I started actually. Do you guys see this in my background?
Yeah.
That's Comex. That's not one of them is not me, but that's a picture from Comex where it's called Open Outcry. So I was one of those guys, and when I first started for 6 months, I was a runner actually. Those are traders. Those traders would just write this stuff on the on the transaction and throw it, because they're all wearing different color jackets, as you guys can see. So each jacket color represents a company. And then I would just grab those tickets and then take it back to the call center. Basically, you're a runner. You're literally running back and forth between the order desk and your trader, right? Look where we are today. You're swinging in your, rocking chair or having a margarita and flipping up on Robinhood, and the trade is done. You know what I mean? So I have been through all that, and obviously we know the trade centers came down, unfortunately, and I spent 2 years there, and then I became a trader. Then I moved to the desk. So yeah, I have traded everything. I've traded from gold, silver, pork bellies. I've traded it all, bro. So, and then you move on. And then I figured, this commodity thing is just way too aggressive. Seriously. So when you guys look at that picture, we have a saying, like, if somebody had a heart attack and literally died during trading, we are so packed tight in that octagon that you will not fall down, because we'll hold you up. As a dead person, we'll hold you up. That's it. That's what it is. and then you move on. And then obviously, the decimalization and the computers, obviously the speed of the computers and all that stuff. So even until today, I love learning. I start adjusting. I keep adjusting, right? You adapt, you adjust. There's no foolproof system. But then if you're disciplined enough, you should be okay. You get in that 10% club, 10% club that, a lot of people, TJ, they go like, isn't that like gambling anyway? I'll be like, slap you in the head, bro. I spent my life doing this. It ain't gambling. There's a method to the madness. You know what I mean? And more importantly, it's not a zero-sum game. Okay. Yeah. A lot of people think it's a zero-sum game. No, for every winner, there's a loser. You want to be on the winning side, obviously. So, but I don't know. I mean, there's so much to talk about, so much to say. But always learn, man. Always adapt. In fact, I have no affiliation with these people, but there's a group out of Canada. So I am a technical trader, mostly, right? And charts are charts, but then charts always tell you what happened in the past. They don't tell you what's going to happen in the future, although some patterns do repeat, like the waves in the ocean, the cycles, whatever. So I met him on X like you, and yeah, there you go. Today it's like that. I wouldn't slap you in the head if you said that to me today. But with like 5 million, how many million DTs they trade a day? 50 million, some ridiculous number.
Yeah.
But anyway, so I started learning about this group called Quant Data. They're out of Vancouver, Canada, and they call charts chopsticks. They actually make fun of charts, because that is a fact, by the way. If you do go to any major trading desk, none of those people are looking at charts. None of them are. All they're looking at is if they're trading derivatives, if they're trading swaps, if they're trading options. And if they're market makers, especially, they're looking at the Greeks, and they have their setup in a way that they're seeing they're looking at dark pools. They're looking at where maximum DEX is delta exposure. They want to be delta neutral as much as they can be as a market maker. They're looking at gamma exposure. All the stuff they look at is this data. And then what happens is that when a whale comes in, an institution comes in and buys 2 days out expiring call options for $1 billion, it gives them a warning, right? So all they do is analyze data. And data is gold, as we know. And they're quant data. They have a server. So I joined. They're amazing traders there, as good as me or better than me probably. And I'm learning. So what I'm trying to say is I'm learning still. I'm still learning. I'm willing to learn. I'm willing to adapt and add new tools to my toolbox nonstop. And you got to keep doing that,
Agreed. So I think you've said a lot. So I want to give you guys the nugget that I took from it, and I'm looking forward to going back and watching this segment that way, and I'll have Alex clip it that way. We have it whenever you came on. But the one thing that you said that I feel like I preach and teach a lot, and I did it, and I made a point to talk about it a lot when I did the Wheeler seminar about a couple months ago. It was like a 3-hour long.
Where are you located, by the way, TJ? Where are you located?
Thank you. Where am I located? In
Yeah.
Texas. In Texas.
Oh, in Texas. Yeah, you're in the right state. See, I'm stuck in Los Angeles.
Yeah.
So there you go.
But the one thing that I made a point to talk about a lot when I did the seminar for you guys a couple months ago was you have to cure yourself from shiny object syndrome. Yep. And a lot of times people think that I'm just referring to the stocks, but it's also just like I experimented with so many strategies early on. And I was like, well, how could I possibly get good at all of them? Why don't I try to get great at 1 or 2 or 3? And then as time goes by and I build my bankroll, if it makes sense, if the opportunity presents itself, let me introduce myself to the wide world of leaps, if you will. Let me introduce myself to put credit spreads, but y'all don't see me going in here and talking about iron condors and butterflies and jade lizards and all this other happy horse shit, because I like to keep things simple. Yeah. Because I just think that this game is so hard. So if you can figure out a way to simplify it and create something that is systematic, consistent, and repeatable, like that Marcus character used to say back in the day, you can make dollars. Yeah. Because my whole thing is I wanted to take an uncertain business and try to create a little bit of certainty for myself and for my family. Because when I went full time, I was doing Uber, Lyft, wine tours, the whole thing, poker, and I went full time with this thing, liquidated most of my 401k at the time. I needed something that could emulate oil field money. Yeah. So I wasn't looking for a casino that was open, 8 or 10 hours a day. I was already doing that at poker. I didn't need that in my life. I was actually looking for consistency, but a way that I could just use my mind versus my body, because the oil field was not sustainable for me. So
the one other thing, this is what you're saying is, correct me if I'm wrong, another mentor advice. See, those have stuck with me forever, right? And they always will, because they're relevant 30 years ago, they're relevant today. One of my mentors said, KISS, do you know the KISS method? I go, yeah, it's a keep it simple, stupid. Yeah, keep it simple, stupid. That is it. That's what you have to do. That's what TJ is trying to tell you guys. I mean, be great at one thing instead of trying to be good at like 10 things, Yes, you can do all those iron condors and butterflies and all that shit, right? And there's a time for that too. I mean, I'm not saying it's bad. There is a time for that. So if you become good enough, right, that you can apply that strategy for what you're seeing, right? Okay, great. But you have to be really, really good. You have to have the tools. You have to have the mental capacity. And we do have a lot of computers, obviously, today. They do most of the work, but you have to be able to apply that. But keep it simple, stupid still works for me, man. It just, don't make things complicated, just follow your playbook. Whatever has worked in the past, pick yourself 2 strategies, max 3, max, and then just stick to it. Just stick to it. Get good at that.
Yeah. So this is a quote that I've never shared with you guys, but this is the quote of the day every day when I meet with 6 other hedge fund managers. So I'm going to give it to you guys as an exclusive, because I feel like, there's a gentleman here that has more experience than I do. So that doesn't always happen on the channel. So I'm excited. So I want to share this with you guys, and I want y'all to write it freaking down and record it.
I'm writing it down.
So you can choose to know a lot about options.
Yeah.
Or you can choose a few strategies that will show you how to make a lot of money with those options. It's up to you.
Great comment.
It's up to you.
Great quote.
There's a lot of people that want to sound real freaking smart when they talk about options. You know who I want to be? I want to be real freaking rich.
Yeah.
You know what I mean? But TJ doesn't talk about the jade lizard. Stick that jade lizard in the forest where she belongs. I'm just saying, like, I'm going to sell puts. I'm going to sell calls. I'm going to collect premium, and I'm going to roll when it makes dollars and cents until it bores the living shit out of you. Why? Because boring is good, and boring makes a lot of money. and it's
Absolutely.
predictable. And I'm not looking for any craziness in life, dude. If you want craziness, go to the subway in New York. I'm going to be there in a couple of weeks. We'll go have coffee. But I was saying, like, I ain't looking for craziness. I ain't looking for an adrenaline rush. Y'all, if some of y'all have seen me at the casino, that's fun. We'll go bet a few $100 on black. That's fun. That is gambling.
Yeah.
What we do here, or what I do here, is very, very systematic. It's very, very calculated. And it took a lot of hours. It took a lot of years for me to make it look like it's kind of easy. Because sometimes that's what scares me, is I feel like some of y'all think that it's a lot easier than it actually is.
Yeah,
and
but
there's
that's when you have to kind of, that's why you go back to your diary and look at your months that you blew them out of the water, and you go like, shit, this was too easy. And that's when my experience over 30 years is that when you have like back-to-back few months that you're just killing it, I talked to Anthony Crudelli, a good friend of mine who was also Wall Street, floor trader and became an amazing trader. And he traded the futures, the ES. And he said, Sergio, it's easy to make it. It's hard to keep it. That's what you got to learn, bro.
Yeah.
And somebody asked me if I'm Armenian. Yes, I am Armenian. And but the other thing is, you mentioned hedge funds, right? Okay.
Yeah.
I did like a little video on my channel. I put up their results. The best hedge fund this year was plus 34%.
Yeah.
So they have all the MBAs, they have all the computers, they have all the algos, they have all the quant, they have all the brains, they have all these Harvard MBAs. They can hardly beat a benchmark. Now, I do get it why that is, because when you're rolling $1 million, you can double that every year. When you're rolling 5 billion, 8 billion, 10 billion, it becomes really, really difficult to chase return. It's really difficult. And but then all you have to do is follow some of these politicians. Like one guy I've talked about, he just did 140%. Nancy does 70% year after year. I'm like, holy shit, that's pretty good. But no, listen to TJ. I mean,
that's called information, Sergio. They have information. They know what laws are going to pass.
Well, there's laws now. Supposedly they're going to stop that madness, which I'm like, yeah, sure. But again, don't also be greedy. Don't revenge trade. All these things that I can tell you that I've done myself. We go down on a couple of trades and we start pushing harder the same day. Especially those day traders, because I have. TJ, can you tell me if you have met a really successful day trader yet?
No.
I don't think they can make it. I mean, they'll make it for a couple days, 3 days probably, but then they'll go like, I don't know how they do it, because they look at the chart, they have 8,000 lines all over the place. Every line is creating a bias, first of all, right? I mean, you're just creating your own bias. You're just going to get stuck at some point. And so, but listen to this, man. I don't come on to other channels usually, okay? And but I do appreciate you. I appreciate your honesty. I appreciate your paying it forward attitude, which I think we're similar in that. And that's it. If you do find a mentor, stick with it. Don't go to 50 different YouTube channels and this and that, because there's a lot of scams out there. So
there really is, and I'll definitely make it a point to go do the interview on your channel here soon. So
yeah, whenever you have time. What I do is I interview. If you
want to give them the setup, because I'll make it a point to go on there before I go to New York. We're going to New York. I
recorded and then we edited. We don't edit much, actually. We put it on. So I had Jack Barugian on, who was the president of CME, who's a good old dear friend. Anthony Crudelli, all these guys. I had a very interesting gentleman about Bitcoin, what he has done with Bitcoin. I don't know if your crowd is into crypto or not, but so yeah, I mean, it's an interesting world out there. There is no end in trading and investing. Keep it simple, stupid. You'll be all right. That's it. Johnny,
you interview people that did rideshare, right, or something like that? Is that?
Yeah, I do that. I have interviewed all the CEOs of. I've known personally the Ubers, Lyfts, and DoorDash. It's on the other channel. What we try to do on the other channel is try to help drivers to become more efficient. How they can make more money. I mean, if you're going to drive, this is like trading. If you're going to drive 40 hours a week, well, there are ways that you can. Obviously, there's a glass ceiling. You're driving, right? It's not like trading, but how you can make incrementally a little bit more by applying different strategies in your own individual cities and make more money. You're out there 40 hours, might as well make the best of it, you know?
Agreed. I don't know what that is, but if that's another channel,
Well, I go,
I'm-
you know, that's another,
I want to. I
that's
want to go on
actually
a
one
lot.
of our followers from another channel, from the other channel. So,
I want to go on a lot of channels. So I'm
well,
easy going.
you know, it's a look, it's an interesting world. And, you know, this YouTube thing is an interesting world. And you know, information goes around at light speed these days. And but yeah, trading farmer, I don't know.
Yeah, I've
Okay.
never heard of
Well,
it.
what did you make $1 million on though? Did you have 10 million and made $1 million, or did you have $1 million and make $1 million? There's a big difference there.
Yeah, I'm not sure. I'm not sure. Well, man, it's
But
been an
anyway,
absolute pleasure, Sergio. I look forward to it. We're gonna finish the lesson because my wife said I have a hard stop in like 20 minutes because we're gonna go do
you
family
always
time.
listen to the wife, man. Always listen to the
Yeah,
wife.
man. You know, happy wife, happy
So,
life.
I appreciate you having me on. So again, you know, I said that before, but my heart goes out to all the, you know, I am in LA, so everything burned around here. I live up on the hills and we were evacuated, but we're okay. And, you know, my heart and prayers go out to all the victims. They have lost everything. And so if you're from LA or Palisades and Malibu, or, you know, Altadena, Pasadena area, man, you know, hang in there, you know. This is the time to be resilient. This is the
Are the
time.
fires more under control? Because you posted some stuff on X, and I was like, dude,
No.
get out of there.
Yeah,
Man.
we've been in the same house for 22 years, and I live in the hills, and we've been evacuated multiple times. The canyon next to me burned at least 3 times. So, you know, we're not new to the rodeo, but it's getting old. You know what I mean? So it's like, it's nerve-wracking, bro. So it's just bad. But so keep your prayers, you know, with the people of LA, especially the areas that look like Nagasaki and Hiroshima, and the atomic bomb drop in the middle of a city. I'm going like, holy crap, how do you come out of that, you know? But yeah, anyway, so thank you for having me on. So, you know, whenever you have time, you just shoot me an email. I'll send you the StreamYard link, and then we'll hop on and talk about half hour, and then I'll put it on the channel for people to see, because I do appreciate what you're doing, you know?
Awesome, and I look forward to it. We'll knock it out real soon. I appreciate you so much, Sergio.
All right. Thank you. I appreciate it.
Take care. Be careful out there.
Absolutely. Yeah. Thank you.
Bye-bye.
Bye-bye.
Yeah.
Dude, what a nice guy, dude. What a nice guy. Dude, I follow him on X, and he posted like I guess from his balcony or whatever, the fires. And dude, and it's just like super close to where he was. And I'm just like, dude, like, my goodness, dude, like, make sure you have like the valuables, the key things, whatever you need, but more importantly, your family, and, you know, get out of there, dude, because that shit is, I can't even imagine, dude. It just looks like we're not even following it anymore because it's so, like, it just nags you out. You know what I mean? Like, if you watch like 20, 30 minutes of that shit, dude, it like ruins your whole day. But I'm like, well, imagine the people that are living over there. It's like ruining their whole lives right now. Dallas, the Gladiator, the Terminator, RoboCop himself. What's going on, my man?
Going on, guys?
Chilling, dude. We had a little master class here with Sergio, a gentleman who's been in the stock market. Jesus, seems like he's been in since like the 80s. based on whenever they used to do stuff old school, like running in a little ticket and stuff like that. But
I think that's what he did say. It was the 80s.
Yeah, we come a long way, dude. The very first stock I bought was into it, and the guy at Merrill Lynch was like, okay, well, I'll get this order in or whatever, and it'll take like a week, and you're gonna get something in the mail and all this other, and it's gonna be like $40 for the trade. And I was just like, dude, like, what? You know what I mean? It's just, and now it's just like we're in and out, you know, 3-4 times a day if we want to. Dallas, what's going on with you, brother? So you changed your channel's name to No BS Options Trading.
Yeah, I changed it because I changed my
Match Twitter, right? To match Twitter.
Yeah, I wanted it to match Twitter, and when I went to change my Twitter to exploring my options, it was too long. You couldn't do it. And I'm
Yeah.
like, I can't have two different names, especially when both of them are kind of like word plays. And so I was like, you know what? No BS options was always my second choice because uh there's a guy I follow named No BS Crypto, and like I just love like he gives it straight to the point, how to make money, not like overanalyzing a bunch of different things, but doesn't actually help people make money, give real live examples, and so I changed it, and I also felt like it's a more like searchable type of name. Like if you were to type in YouTube like options trading, I think it'd be more likely to push me up there as opposed to exploring my options. And I don't really think everyone even like can read into like what the exploring my options really the dual meaning really means. So yeah, I just figured it'd be better. And that's just kind of the mentality that I want to bring to YouTube is like just no BS, man, like straight alpha,
We're all seeking it.
Yeah.
Dun,
Today.
dun. Dun, dun. Anyway, real quickly, Dallas, just layman's terms, dude. People have been freaking out because, oh my God, I rolled this option and I got credit and I rolled my strike from 10 to 12 and things are great, but it's showing a realized loss. In layman's terms, can you just explain to people why that is? Like, why does Robinhood have to show the loss right there whenever you rolled? If you collected less money than you had to give back, because sometimes you can roll for a credit, roll out and up, and get even more money, and you don't have a realized loss because it just depends on what the situation is. If you're like right, at the money, you're like at 80% profit, and you choose to roll that option, you're probably not going to be showing a realized loss in that scenario. But in most scenarios, when you're underwater on the option and you roll, in most cases, you are going to show that realized loss. You kind of want to walk them through that basic math real quick.
I mean, unless I'm misunderstanding what you're saying, I'm thinking regardless of whether you roll for a credit or a debit, it's still a realized loss because you're closing out the losing trade, and then so that's your realized loss right then and
Dude,
there.
I have rolled options for realized profits as well, because you can roll an option that is winning.
Yes,
That's
yes,
winning. Yeah,
yes.
that usually is not the case. 9 out of 10 times you're rolling at a deficit.
Yeah, yeah. That's the point of if you're rolling a losing trade, no matter if you collect a net credit or not, you're still locking in a loss, which is a realized loss, even if the premium coming in is more than the premium going out. And so I rolled a couple options today, actually, Microsoft and CrowdStrike recently. I was surprised how little I was able to roll out CrowdStrike. I only moved it up $10 and I had to go out until July. I was like, that's crazy because there's at least one or two earnings between now and then. So not sure about that. But yeah, I mean, the biggest key, I mean, I've told it several times on this channel, be really careful, especially with Robinhood, making sure that when you do roll your new contract, since most people probably are using Robinhood watching this video, that it's only going to show you the new contract. So I when I was a newbie, took an immediate loss because I rolled it and went in my favor the next day, and it was showing a massive profit, but that's only on the new contract. So I thought I was locking in a massive win, which didn't make sense in my mind because I knew it was too good to be true. But I closed it out, and then I ended up adding all the credits and debits the next day, and was like, wow, I just locked in a loss. Actually, double loss without really meaning to.
Yeah, for sure. So this is what I want to show you guys real quickly. I don't know if you're going to be able to see it too closely, but so that's a hood that I rolled from 48 to 45 to 48. I went from 117 to 27. And you're going to see the realized profit there of 350. I don't know if y'all can see it or not. But that's 350 right here where my finger is. I can see it. So the reason is because I was up like 60% on that trade.
But TJ, you're gonna realize, like, if you close out a position, you get a realized gain or loss. There's no other option, right?
No, but what I'm saying is it's not always going to be a loss. Is what I'm saying is you can have a realized profit.
I roll ones that I'm up on all the time just because I can push it out and get more money, right?
Yeah, you want to keep it on before it gets out of control or whatever the case. I do it a lot on puts whenever
on puts is what I'm saying.
I feel like this shit's gonna go up, and I'm like, this might be the last chance for me to do this. So let me go to one last cash grab and let me just roll. And you can have cleaner books, guys. If you don't want to mess with this stuff, you can have cleaner books simply just by buying to close, and then that'll be definitive for you on the tracker. And then you can sell to open again, and you are good to go. So I think that's pretty self-explanatory there. What I want to talk about.
I do have one more thing to add to that, though.
Go ahead. Yes.
Whatever the amount is like in your example previously, you said it was like $400.
Yeah.
You only collected like 300 in premiums, and was rolling in the losses. You're not automatically, and this is kind of what Dallas was getting to. You're not automatically sitting on a loss per se in that new position,
right?
But that $400 becomes your new cost basis.
Yeah.
So you could go up 25%, and you like on the new position, it looks like you're up 25%, but really, in the grand scheme of things, you're still down net, right? So you have to pay attention to that.
Yeah, and then right here you'll see these market value of 9,700.
Mm-hmm.
This is because this is already the third roll on this particular position. So this is the one I just took from 45 to 48. So it's just like at some point, something has to happen for this number to go away. One, Robinhood's going to have to stay under $48, and this thing could just expire worthless, and then no harm, no foul. Now you have a legit realized gain because you're out of this option. You still have the shares. The other thing is Robinhood can go to 58, and I say, screw it. I don't want to do it anymore, but I don't want to give back any premiums. So I'm just going to wait for these shares to get called away. Again, no harm, no foul. You're going to be good because you're not going to incur more losses. The only thing that you're going to have is an unrealized gain from the standpoint of the opportunity cost because you didn't qualify for that capital appreciation. And to Dallas's point, what he's talking about is if I let this thing go and I look up in a week or so, it's going to show that I might be up 50% on this trade. And what Dallas was doing early on in his career, he's like, fantastic. I'm going to go close it out because I'm up 50%. And then he had a da-da-da-da moment, right? And he's like, wait, hold on a second. He was acting like Joey from Friends. Like 3 days later, he caught the joke. And then he started doing his credits and his debits. And he's like, holy shit, I'm actually losing money here because I didn't think of all the money that got swept under the carpet. And that's where rolling is very, very dangerous. And I think Mr. Premium made a point a long time ago before, whenever he used to come on episodes of Wheelers with us. And he said that he always rolls as two separate transactions. And I don't know if that's just because that's the way he was trained to do it, or if it was an accident or whatever the case may be. But it does give you cleaner books because every move is definitive at that point. And then you're going to see it. So that's one question. Here's the other question, though. And I'm hoping that together between the chat and Google and Grok and Gemini and everybody else, I would like to finally get an answer to this question right here. Let's just say you keep rolling and rolling and rolling the way that I do with Tesla. But instead of yearly, I'm doing a monthly, or every 2 or 3 weeks you're rolling because you're stuck in like a cycle of like a month or whatever the case may be. Are you creating wash sales or not? Because I get so many wash sale notifications at the end of the year on my report, and I have no idea why half of these wash sales occur. So my assumption is, or my presumption, whatever the case may be, whatever the right word is here, is I assume that it's because of all the rolling that I do. Like
No.
like how does that work?
No, that rolling a position to a different date is or a strike is not going to do a wash sale unless you've like locked in a huge loss and then you close that position out after into the new fiscal year and it hasn't been 30 days or something like that. But just a typical like rolling of a position when you're closing that one out and opening up a new one and you're locking in a loss, no, that's not a wash sale.
Yeah.
I always roll one leg at a time. You get much better fills, especially if it's deep in the money. The bid and the ask can be like crazy wide.
Yeah.
You can take like it'll knock off some money for sure. So especially if it's deep in the money, you're way underwater. I would advise to do it in 2 separate transactions. It'll save you a good bit of money.
Agreed. You definitely will get slightly better fills. It just takes a little bit more patience and time. For sure.
And sometimes you close it out, and then like what I like to do is have that number like really stuck in my head and try to get it filled quickly. Because sometimes if the stock moves like in the middle of you doing that, it'll mess it up as well. So I guess there's pros and cons to both sides.
Yeah. So one person was asking, what's a good reason for rolling anyway? Y'all want to tackle that one? I feel like I've talked about this one 1,000 times already.
So, I mean, I'll start, but I mean, I think me and Dallas going to give the same answer. It's you can reposition yourself, whether it's a cash secured put, you can, and the stock is going down and you don't want to take ownership of the shares at that price, and you can, reposition yourself to bring your strike price lower, but potentially even collect, more money in credits by doing that. So bring in more premium, or vice versa. If you have shares and they've gone up and they've breached your strike price on your covered calls, you can qualify yourself for more money on the upside of the shares, but also in some cases get paid to change your mind and push the date out and the strike price up. So it's just about repositioning yourself in based on what the market conditions are that are coming your way. You can't get everything right up front all the time.
Yeah, and you can. Some people also. I don't personally do this, but some people also roll to lock in the win and immediately, like let's say you're up on a cover call, like you have your cover call on, the stock starts going down, they'll go ahead and roll that cover call down with the stock if they constantly want to have a cover call on. I don't personally do that because if you have a cover call on and the stock moves down, you are locking in the win. But if you put on another cover call immediately, it's obviously not as good of a position. In fact, I think even TJ posted something on X recently. Like, would you put that position on in isolation at that point? And most of the time it's not, because we want to sell cover calls when the stock is going up. And so if the stock's going down and that means your cover call is in a bunch of profit, would you want to put on a new cover call right then and there? I personally would not, but some people like to roll to lock in profits and to just keep that hedge on all the time. I like to take it off. Ideally, the stock runs back up and then put it back on.
Go ahead, Dallas. Sorry, I was watching your channel in the background, and you were talking in the car. Why you changed the name of your channel? Did Dallas?
Yeah, I mean, someone said, "Why is your portfolio at 271? I used to see it at 290." Do people not think portfolios like fluctuate, or what's going on here?
Your portfolio didn't go to the gym, bro. No gains, Dallas. No gains, bro.
I can't wait to just have like cash out the crypto and put all that cash in the stock portfolio, because It's so weird because the number is like 271 on the thumbnail, and then the title is like 570 whatever, or 540, I think. And so it's like, why is there such discrepancy in these portfolios? But yeah, man, when you have hundreds of shares, when you have big positions, I mean, Tesla goes from almost 500 to 400, you're going to be down some money.
You mean when you have a bunch of shares and you go to today's return and you see 177,000, 181,000 to the good, that kind of thing? Like that? Is that what you're talking about?
Yeah.
Well, guys, guess what? It works the same way going the other way. In fact, it's a little more vicious. So I just often wonder, dude, let's take a minute here and let's just think about it. How does Warren Buffett do it owning millions of shares of these damn companies, dude? And this Coca-Cola goes up $2. Let's go. Can somebody tell me how many shares of Coca-Cola Warren has? And Coca-Cola goes up or down $2 a day or whatever the case may be, or Apple, because I know he trimmed the position, but he had a lot of shares here, at some point. I mean, that's ridiculous, right? Because this freaks me out a little bit. But I'm like, well, this man's got to be probably plus or minus, 700, I don't know, probably $3 to $5 billion on a daily basis. Have y'all ever seen those little things? Elon Musk's net worth up or down like 20 billion or something crazy, right? Because of what Tesla did.
Yeah.
And then we're over here freaked out over, so look at that. So do some math. Help me out. It goes down, what is that, 400 million shares? Is that what that is? So it goes up $3 to this $1.2 billion. I mean, it's just, that's the thing. If you want to own a bunch of shares, right? If you want to own a bunch of shares, those are the fluctuations that you're going to deal with. Whether it could,
I think I heard today you were talking about rolling. Actually, I don't like if I'm sitting on a winner. Let's say I'm up 75% on a covered call. The stock's kind of trending downwards. I don't like to roll that stock strike, that covered call strike price. I don't like to roll it down.
Dude, that is just a tool in my arsenal that I think I might have used one time going on 5 years now.
Yeah.
I just feel like you're gonna get like a little bit of premium for like a whole lot of stress potentially, and then just to reverse the process if it doesn't, if it ends up going back up. I'm like, I've just never seen I guess the logic's never mathed for me. What about you, Bill? Is that something that you do? Let's say it's way out of the money, and you're like, I'm going to try to squeeze a little bit more premium out of this thing because you're just like, quasi hedge to the downside, if you will. Do you do that, or do you just let it ride and look for another opportunity later?
I do it more on the put side than I do on the covered call side.
What do you mean? You'll go up and strike on the put?
I'll bring it up. Yeah,
really?
If it makes sense. Yeah. I don't often do it on the covered call side because I'm just always underwater and shit on the covered call side. So I'll just take the win when I can. But I'll do it on the put side all the time, especially if I don't mind owning the shares at the new strike price.
Interesting. So anyway, guys, can we talk about some capital efficiency? I did something yesterday. I don't know if you guys caught it or not, but PayPal was fired from the portfolio from a share ownership perspective because this hamburger stand says, if you don't give me enough premiums, I can't own you. I can't own that menu item. It's just not bringing in enough premiums on an annual basis. So the consternation these covered calls are costing me, and on top of that, not getting enough premiums, I was like, you are fired. I Donald Trumped it since he's about to get signed on. What's it called? Take the oath, sworn in. Is that what it's called? Sworn in? He's about to get sworn in. So I went like, you're fired. With his little hands, the way he used to do it before in The Apprentice. So I was like, you're fired, PayPal. And PayPal got all up in her feelings. And I was like, relax. Before I fire you, I'm going to make sure I have enough leaps. So I have 200 leaps at 75 and 100 leaps at 50. And I've got 200 covered calls. So let's play this game. How would you manage this position? So let's go through it. It's trading at about $90. There's 4 open strategies. There's the $95 cover calls expiring at the end of the month. You can say that those are against these leaps right here at $50 for January of 26. And then I've created essentially a little bit of a debit spread over here by buying leaps at 75 for June of 2026. And I have the $100 cover calls that are going to eventually be, I'm hoping there will be an absolute pain in the ass. The idea is, well, I can always just exercise these and play the game again and then eventually sell the position entirely because I got caught over here. So I'm going to have to make good at some point. But over here, I'm in really, really good shape, I feel. And up a shitload of money on those leaps right there. Up almost $250,000. I wish $250 million. So $250,000 on those leaps. How would you play it? Because it took a lot for me to not, because I sold those cover calls today, the $95 cover calls, and I considered just cashing out this position right here and then just rocking with these and be like, I'll deal with you in a year or whatever. But I chose not to. I was like, let me try to get another $40,000 or $50,000 in cover call premiums over here. And I think that PayPal can go to like 95 or 100, and then I'll close this position out in its entirety because I don't want to turn that into shares because the premiums just suck. So that's kind of how I'm playing it, but I like to get you guys feedback on it. That's the entire position right there. How would you proceed going forward, Bill? And what do you think, honestly, about me having the courage to do what I said I was going to do and try to get rid of some of these stocks so I can have more money to sell cash and cure puts because I just feel like it just brings in more money at the end of the day.
Yeah, for what your goal has been, I think it makes sense. I think PayPal is kind of like I don't see it going from 100 to 120 in a week. So the good thing about PayPal is, the premiums don't get you a lot of money per se, like in comparison to like a Tesla or something else, but they're actually a hell of a lot more consistent because it's a more controlled stock. It's just more consistent. It just kind of slowly ticks its way up. So even if you are underwater on your covered calls, it's a hell of a lot easier to get out of trouble because it doesn't blow past your covered call and just keep going up like Palantir did, right? So I don't mind that play because I think you'll be able to get your premiums back. And then if you want to pick up the shares for, what was it, $75 in the future, it's easy, but you're not tying up that cash right now. So I actually like buying calls on stocks that I think will go up over time, but not necessarily where I'm worried about them, just mooning on me because I can, it's just more controlled for me. I can constantly get that income and get that money back for what I paid for the long calls.
Hey TJ, I got something we have to take care of. It requires some serious attention, so I gotta go.
All right, brother. Be careful.
All right, thanks.
Hey, Dallas.
Yeah.
So Dallas has to go use his gun over there. Is what it sounds like.
Good dress for the occasion.
Scary. So, the big thing was with these leaps. If I look at how much they cost, it's $188,000. So now I looked at it this way. I was like, there's 188, so 1888 times 100 times the 100, right? That's how I got to 188,000. So I'm like, okay, so there's $188,000 tied in capital. I could look at it like there's 428,000 tied in capital. That's one way to look at it, but that's not what was invested. You follow me? Mm-hmm. So this is how I justified it. I was like, well, there's 188,000 tied in capital. How do I know? Because I had those numbers right there. And it's about 188 and some change. And I'm like, now that's yielding. Now that is yielding whatever I got for these $95 covered calls for just, I don't know, what is that, 2 or 3 weeks from now? 2 weeks from now? Give or take 2.5 weeks. And that paid a cool $5,200. So I was like, shoot, dude, for a 2-week trade, 2.5-week trade on a $188,000 house that we had paid cash for, that's going to yield about $7,000-8,000 a month. That's a pretty damn good return. But if you had to own the shares outright at $90 times 10,000 shares, that's a shitload of money. You know what I mean? It's 900 grand. And that's going to pay the same 5,200. So I couldn't justify a world. I couldn't see a world where it was worth owning those shares to just collect that little premium right there. But when I look at that premium in comparison to the $188,000 investment, I'm like, dude, PayPal's paying really good premiums on that. Because that's the thing that just is evidently, it's just so evident to me now, like crystal clear. And it really wasn't until fairly recently is, why the hell am I owning so many shares on these non-dividend paying stocks, when the covered call premiums are the exact same? I know it's more to manage and stuff, but I've also haven't proven that I'm willing to own some of these stocks for like 10 years or whatever. So that's out because I don't treat this shit like the 401k. So I'm like, why don't I just call it what it is? I'm like, essentially swing trading a lot of these stocks, unless it is like a legit, like a Tesla, the SoFi, Amazon. I can't even categorize Riot there because only 100,000 of those shares would be for the long term. The other 50, I promise you, they're a swing trade. Mm-hmm. So it's like, why am I owning shares in stocks unless the premium is just super damn juicy, or I want a pillar in the portfolio like Amazon?
So I think I have a good way to look at this, and then I got to run. My wife's kind of
I did too. But
I think a good way to look at it is it kind of do exactly what you did. That 5,000 for 2 weeks, annualize that return on what you have invested. So you said it was 188,000, and see what your annualized return is, and then do the same calculation where you say, all right, well, you had that amount of shares, and you got the same premium of 5,000, but do it off of what your cost basis was on what you paid for those shares, and you're going to see that your annualized return is going to be a lot higher on the having the leaps, because it was so much less money put up front.
Yeah, because the average cost of the shares was about $60.
Yeah.
Whereas over here the leaps were like 20, not even 20. Mm-hmm. So, but it worked out. So I'm just thinking, okay, so I have profitable leaps. So then like the strategy is like own the shares, have the leaps, eventually get rid of the shares, stick with the leaps, because now you got a proven commodity, and then you're just rocking with it. And you know that the end is near for PayPal, unless I'm willing to at some point exercise those leaps and play that game again. But what would incentivize me to exercise those leaps? The only thing that I could possibly think of is that they introduced a dividend or something like that. Other than that, I'm like, well, maybe I believe in it that much still. I think it still has more upward trajectory with it. I could just extend the leaps. I could buy more leaps, be 2027. I could just keep playing this game over and over, but PayPal is going to have to give me a very, very compelling reason to ever own any more shares. But that doesn't mean that I can't make money off the stock. You know what I mean? And I think that's the part that I'm just getting more comfortable with, because I come from the buy, hold, and hope mentality. So this is just, and then what have I done with all that money? Well, I've been selling a bunch of cash secured puts on the miners and stuff like that. So it's kind of, it's really been working out here as of late. But anyway, down to 9 stocks, guys. And eventually Neil will be out of there because this is a swing trade. So this is going to be the Elite 8 right there. I've gotten the position a little bit bigger on in phase. Marathon and Clean Spark are also swing trades. I won't be in these past the crypto whenever I feel like there's nothing there. Like, I'm going to make it a point to get out of there. So I really only have 1, 2, 3, 4. It's the 4 horsemen. That's it. And then I have to make a decision on Hood too. And I got to go. But on Hood, Bill, I'm also thinking, I got the 10,000 shares, but the premiums on Hood are pretty good. But I've got 100 leaps already. I'm thinking maybe I turn them in, like on a pullback, turn them into another 100 leaps and keep playing the game, and then sell the shares and then take that cash and go somewhere else. So what am I saying to you guys here today? This is the hot take. I see a world where the only shares that I'll own in this portfolio are SoFi, Riot, Tesla, and Amazon. And it literally would just be the four horsemen. If I own any other shares, it's strictly for a swing trade. And I'm just going to sell cash secured puts. I'll cash grab on other stocks, like Hood and everything else that's in the list right now. But I only want to own shares in these companies right here. I'm saying that Hood is going to graduate to that $1 million level. We'll see. I want to maybe go do a podcast with the mid or whatever, and we'll talk about it. So I could potentially land in five, but I kind of do like the idea of the four horsemen, and then another stock would have to come in here and make an absolutely compelling reason on me moving these, because all of these stocks I feel like can double from here. They pay good enough premiums, and it doesn't freak me out to own them. Like, I can go through the good times, I can go through the bad times, and I'm just super, super, super comfortable with it. So anyway, that's a lot, but I got to go. Bill, appreciate you. Let's give it up for Sergio and Dallas. I thought that was a really, really good segment. Hopefully Alex can clip it for us later. TJ the Wheel Deal signing off with Bill. I appreciate the 1,992 folks, mostly from Twitter, and 106 of you guys from YouTube. Y'all could do me a favor and smash the like. That'd be great. As always, may your sky stay blue, stock screen. Peace out. God bless you guys.
See you, TJ.
Take care, man.